Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Wednesday, September 23rd, 2009. The euro-dollar pair was down overnight following a rise to a new one-year high at 1.4843 at the beginning of the global session. The euro then retested that level in the wake of the FOMC interest rate meeting. Those gains by the euro, however, were short-lived, and the rejection at the intraday high, in conjunction with a slide in U.S. stocks, gave the greenback some strength as it pushed to the 50% retracement level of the pair's recent upswing. The Fed, in its announcement, held little in terms of any surprises. The Fed upgraded the assessment of the economy, but reiterated that with substantial resource slack likely to continue to contain inflation, that the Fed will keep rates at exceptionally low levels for an extended time. The statement also said that the Fed would extend its purchase of mortgage-backed securities and agency debt into the first quarter of 2010 in order to smooth out the purchases. In Europe, the flash versions of both the services and manufacturing PMIs for September rose in comparison to August, but the gains were smaller than anticipated in the manufacturing PMI. The services PMI rose to 50.6, the first month of expansion in the indicator in 16 months, while manufacturing remained slightly below the 50 level. Still, the manufacturing reading at 49 is the highest since June 2008. A second report showed industrial orders increasing for a second straight month in July. Orders rose 2.6% from June when they increased 4%. The data implies that the recovery in the Eurozone could be gathering strength, though there are still concerns regarding rising unemployment and low investment by companies seeing low capacity utilization rates. The pound-dollar pair, which had been rallying since finding support at 1.6140, fell in late New York trading as a risk aversion on falling U.S. stocks helped to boost the greenback. We have seen a 50% retracement of the down move from 1.6740 to 1.6140, with the pair unable to extend its gains. The decline from that Fibonacci level fell through a downward sloping line of support. In the UK, Bank of England meeting minutes show that Governor Mervyn King agreed this month to support policymakers' August decision to buy $175 billion of asset purchases, suspending his drive to buy even more. The pound had suffered recently as there were concerns the bank was mulling expanding its quantitative easing program, so today's minutes were pound supportive. A second release from the UK showed mortgage approvals declining slightly in August, a figure that missed expectations, though overall mortgage lending did increase compared to the previous month. Last night, New Zealand released its GDP data, which came in better than expected, with the economy emerging from its recession by posting a positive reading. The 0.1% increase was the first time in 6 quarters that the economy grew. Growth came as a result of higher consumer spending, along with higher exports. The New Zealand dollar-US dollar pair surged on the GDP news, extending its gains from yesterday's rally. However, the pair gave up its gains throughout the rest of today's trading, with the drop in U.S. equities the main catalyst for the decline in late New York trading. The pair fell to 0.7190, which is where it opened to start today's session. Tonight, Japan will release its trade balance, Australia posts data on new home sales, and New Zealand reveals consumer sentiment figures. Overnight, Japan releases its All-Industrial Activity Index, and Germany posts its IFO Business Climate Index. Tomorrow, the U.S. reveals data on weekly jobless claims and existing home sales. And that concludes today's broadcast. Thank you for joining us here at CMSFX.com, and happy trading.